Time for today's Three Stock Lunch, where we look at three big movers of the day. Here with our trades is Jerry Castellini. He's Chief Investment Officer at CastleArk Management. Up first, we've got Merck. So shares of Merck jump as earnings beat expectations. The company sees strong demand for two of its top drugs. Jerry, what's the trade for you on Merck?
Yeah, I guess I'm happy to see their current drugs are doing well. But in a bigger context, I think this year it's important for investors to appreciate we're not going to be moving as much in the 24 market as we have in the last few years based on sector. It was always all tech or all healthcare or something. I'm of the mind that you have to pick winners now and not try to pull or bootstrap up some of the laggards. Merck has been a laggard, and it's not one I would choose over Lilly. But more importantly, we tend to avoid when big pharma companies have upcoming approvals with the regulators, and they have three drugs in the pipeline that you're going to hear important news about this year. And I'm always leery about what you pay for going into those type of announcements. You tend to do quite well after the fact rather than leading up.
All right, let's go to Norfolk Southern. We heard earlier, Jerry, about the proxy battle involving that company. The stock on track, highest close in nearly a year. The trade here, sir. Yeah,
so Encora is of the view that by taking and being an activist here, that they can have an impact on the board. They can have an impact on how management should or shouldn't behave. That's a tough road. Again, we're not a buyer here. We're a holder, essentially, because with an activist in there, you usually don't have big downside. But again, you're asking a lot of a basically a monopoly business like a railroad to all of a sudden have a bunch of things that an activist can fix. They don't like the management. The management's clearly underperformed. But at the same time, what can they do to really drive this to outperform? And when you look at the route structure of their operations, they're not as good as, let's say, a Union Pacific, who has a monopoly from the West Coast and to the South, and right now is seeing much better year-over-year numbers than a Norfolk Southern, and they're not as dependent on coal. And again, we just feel like you can hold this. It's got some downside protection, but we would look at the other name.
Okay, and finally, we've got Boot Barn very quickly. The company beat Q3 earnings, missed on revenue estimates. Shares up 10% today, though. So, Jerry, what's the trade on Boot Barn here quickly?
Yeah, definitely sell. This is a short cover rally. People were really concerned about the crummy weather during the Christmas season and the impact it would have on boot sales. Obviously, it wasn't as bad as we thought. But if you look back over the last few years, the earnings power of this company has just not met expectations, and there doesn't seem to be a quick answer for that. So we would take the opportunity of a quick pop like today, as people are trying to cover and mark up their books. We wouldn't stay in this name.
All right, your boots are made for walking. Thank you very much, Jerry Castellini, for joining us for Three Stock Lunch.